Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. Today, I want to give you 2 companies to add to your watch list. Now, before I do, I need to set the table, give you a little bit of context for what we expect in the market over the next 3 or so weeks, and then how this list came together. So first, how this list came together. Now, in our membership group, I've got five companies that I am looking at, that I've already done the research, and I'm really excited to dip my toes in the water at the end of this month. However, I'm giving you 2 today. If you want the full 5, click the button at the bottom, join the membership group. We do at least 1 video per week. It's like $2 for every video for the entire month. That's it, $2 a video. Okay, and we do more deep dives. We do Q&A when you guys have questions, so you get priority questions, and then we dive into what I'm looking at, how I'm looking at it, and then what I'm expecting. So that's number 1. The second thing is the next 3 weeks are going to be really interesting in terms of what we are going to hear from the stock market. So number 1, we're going to hear about inflation this coming Friday. I don't know in what direction things are going to go. I just know the stock market is going to react. Then we're going to hear from the Fed around what they're going to do about interest rates. The market is going to react. I don't know in which way they're going to go. And then we're going to get earnings season again. I know earnings season feels like it's every week, but again, the cycle starts over. So January, February, we got Q4 2021 earnings. Then we got Q1 of 2022, and now we're going to get Q2 of 2022 in about 2 weeks. So it's going to be interesting, and the market is going to move. And we've already talked about why the market moves the way it does at some point in time. So today I want to give you 2 companies in different areas for different reasons, and then we'll go ahead and get started. All right, so first one, Coca-Cola. It's easy, it's boring, it's also up double digits. In fact, I'm going to pull this up real quick. Coca-Cola is up 14.56%. You probably, unless you own Coca-Cola, you probably didn't know that. The stock market, the S&P 500, is down 11.22%. So you can be down double digits with the entire stock market, or you can ride the ship of Coca-Cola and they're up by double digits, which in a normal year, this is not normal. Usually Coca-Cola is known to get you 4 or 5%. In this case, we're talking 14.5%, and it's just half the year. Now I can't sit here and tell you that for the next 6 months, it'll be up, the exact same 14, you'll be up 30%. Cannot say that. But it sure would be nice. Now, the good thing about Coca-Cola is they pay a healthy dividend. They're in a true defensive category, much less than Target. Like Target, and we've talked about this yesterday. Go back and watch that when you haven't. Target has a lot of discretionary items in that you don't have to get furniture. You don't have to buy a brand new TV. You don't have to get a brand new camera, but you do have to get groceries. Well, Target, in some ways, Target is the groceries. Now, I say that in air quotes because you don't need Sprite. Most people don't need Sprite. I like Sprite. I don't drink Sprite, but I like Sprite a lot. I don't drink a lot of Sprite. Y'all get what I'm saying? I drink water. I have a gallon. Y'all have never seen it. I need to do that. But I drink a gallon of water every day. Very rarely do I drink any pop. I call it pop. Y'all call it soda. Whatever. Side note. But aside from all that, they make Dasani. They make Coca-Cola. They are Coca-Cola. They make Sprite. They make a bunch of drinks. The point is, that is one of the few things that almost never gets cut. Now the difference though, because you may be thinking, well, in 2020, they didn't do well. Why would they expect the last time we had a recession? Why would they do well if we are in a recessionary period now? If we're seeing inflation, which we are seeing, what's the difference? The difference is the fact that restaurants are open and people are traveling. Is COVID still out there? Yes, it is. However, the game has changed to a degree. I say that because unlike Pepsi had the advent of snacks. They had Frito-Lay. If you were at home and on lockdown, you could order your Pepsi and get a bunch of snacks. That's what people did. So I gained an extra 20 pounds. Again, side note. But aside from that, is for Coca-Cola, they have a significant chunk of their business from the fountains. So when you walk in and you fill up your cup of whatever it is you're drinking, Coca-Cola made money from that because that restaurant had to they bought like syrup boxes basically and had to refill that stuff over and over again. Coca-Cola's make a lot of money that way. again, a huge chunk, a bigger chunk than what Pepsi has of their business comes from being the fountain vendor and being out there. When restaurants were closed, they didn't get that. Restaurants are open now. That's one thing that is helping Coca-Cola. People are traveling again. Yes, inflation is going to hamper a bit of that. It's been hampering it so far in the last 6 months, and they're still up. So I would expect that trend to continue, barring anything catastrophic, which again, it's kind of hard to see a bear case for Coca-Cola. That doesn't make it invincible, but it's really hard to see a reason as to why people would stop drinking water from Dasani, stop drinking Coca-Cola and whatever else that people like from this company, because they've been doing it so far and they've always done it. Coca-Cola has been around for more than 100 years for a reason. So that's one very, very easy stock that I think most of us here can understand and see the case as to why this company is so solid right now. The next one is IBM. IBM is up 15.83% last 6 months. And the reason why I have this expression right now is because I did not imagine any tech company being positive. Now, I could talk about Berkshire Hathaway being one of the few financial companies outside of insurance that was positive at one point in the years. That's definitely cooled off. But I mean, anything from Nvidia to Meta to Apple to Amazon. I mean, Amazon's down, what is it, 20 or 30%. IBM is up. IBM is up quite big, again, at 15.83%. And they are a very good case, I think, even for the long term. Obviously, you can keep Coca-Cola for the long term if you choose. But IBM is in a space where they're doing well now based on how their business is organized. And should things, let's say we don't hit a recession and things go back to normal, which what we're used to from a stock market perspective, they could do even better down the line. So if you're looking for a little bit of diversity and trying to get you a little bit of tech for now and the future, IBM might be one of those places that can sustain. And if I'm not mistaken, they pay a pretty solid dividend too. So you got two dividend stocks, one in the consumer defensive, if you will, and then another in the technology space. And I think that the interesting thing here is they're not they're not software only. They're not hardware only. They're in a weird artificial intelligence plus patents plus defense, and it's just a really strange mix of businesses and strategy that fits for right now in 2022, and that may fit for the next several years. So IBM was definitely one of the biggest surprise out of these two. Now again, I've got a list of five. Click to join now. You can be a part of the members only group. We do at least one video per week, so you definitely want to go and get the entire list. But for today, those are the two I'm gonna look at. Before we go, I'm gonna give you one other thing about these two stocks. Now y'all know I make my changes to my portfolio at the end of the month. However, if you're not on that schedule, which is totally fine, or if you're looking to trade or do something else, I'm gonna give you 2 price points. That I like. So if I were going to, let's say, look at this on Thursday, then for IBM, I would like to come and get IBM at around $139 and let's say 60 cents, 63 cents. Right now it's at about 140. So if it could come down, let's call it $1.20, that's where I would start to quote unquote open my position. That's where I would like to buy to buy IBM. Now for Coca-Cola, the same. Now you can get it at any point in time, but again, if I were to look for the best price, that's the price where I would go and get it. If I'm looking for Coca-Cola, it might be a little bit longer of a wait, but I would like to get it at about $60.90. $60.93 is the exact price that I have marked on my technical analysis, but that's where I would prefer to pick up Coca-Cola if I were looking to do so at this point in time. For me, right now, personally, they're on my list. I'll compare this with the other 5 that I have, as well as some other resources, and see what I need to get rid of for me and which one of these 2 or which one of these 5 from the previous list that I'm going to add to my portfolio. So that's what I am doing. If I were trading or looking to get into something right now, those are the 2 companies and those are the 2 price points. Now, last thing, remember this Friday, I think I mentioned it earlier, this coming Friday, we're going to hear about inflation. These prices and charts can change between now and then. So we'll see. Could Coca-Cola fall all the way down on Friday to the exact price point? Don't know. It could rise. We could say, hey, inflation is still out of control, and then Coca-Cola's defensive stock can shoot through the roof. You don't know. So keep an eye on both of these. Add them to your watch list. Let me know what you think in the comments. Are these two companies you own? Did you expect to see IBM be up close to 16% this year? And what do you expect for the rest of 2022? Let me know what you think in the comments below. That's it. Talk to y'all later.